Hey guys, it is July the 22nd, and this is Markets with May, and this is Friday. What a crazy day in the markets, as per usual. Let me share my screen. Past performance is not indicative of future returns. We are definitely in the red today. Ouch. Hopefully, you guys hedged, like I said yesterday, because next week is the FOMC meeting. And so anything that you were buying in the put side, you need to just chill out and wait till early next week and see how it goes. Here's what the screen looks like. My goodness. Let me just make sure. I have no idea why Google can possibly find 5% more to be down, except for Snap in sympathy there. I mean, should we say like, oh, snap, is that what it is? But both that and Meta down 5%, 7%. I've been negative on Meta for a bit of time here, so I have puts on it. I'm going to chill out until closer to the FOMC meeting and then probably finish off profits at that point. My suspicion is a lot of people have a strategy of that nature. And really, I recommend that if you've got a lot of exposure on, if you got a lot of positions on, and they're not long-term positions for you, kind of take some profits, right? Rather than hedge, rather than anything else, just take some profits. The one place that I would actually consider taking more exposure is the volatility index, because the VIX, and here I'm going to use the SIBO because when you use the ultra, sometimes it's hard to tell what the levels are. But at one point it was almost kissing 20. It was like down by 22. And I'm like, why? The world is crazy right now. So, we've got that. Let me show you the economic calendar for next week. We've got consumer confidence. I'm sure the consumer is less confident because every other number we've been getting has been the consumer being less confident. And you've got the Fed funds rates that will come out at 2, and then he'll speak and we'll get a sense for how weird this week's rally was. And then we've got the inflation index. PCE is actually used by the Fed a bit more than CPI, but they rarely say different things, to be fair. And then some more jobless claims. It's really these three things that are going to be meaningful. And it's not just the PCE. To be fair, if you look at what's going on Friday, it's a ton of different economic data that people are just going to have to absorb, all related to how is employment going, which is really the biggest question right now out there, because the US is clearly, from all the earnings reports I'm seeing, holding up the rest of the world. We are absolutely, it's crazy because I had talked about this back in March, that we were the net beneficiaries of the conflict between the Ukraine and Russia. And I know Dave probably remembers that because it's hyper controversial. And then I stopped saying it because I just got a little scared, but it's literally coming out in every earnings call related to raw materials. I'm going to go through Nucor and a couple of the other earnings. But when I look at so this is this week's earnings. This is next week's earnings. Next week, we've just got a ton of everything. So I can't even be like, let me highlight some things for you. Everything is coming out next week. And then if it doesn't come out next week, it'll come out the week after. That's all your most of your really important big cap tech. I don't know why it's not already listed on here, will come out during different times of next week. And then we have like maybe a couple of others that are coming out the week after. I got to add that back in. And then you would think like, oh, by the end of the week, I could take a breather, but you've got ExxonMobil and Chevron on Friday. So there will be no breather next week. It'll just be the first Monday, you get a second, and then like just hold your breath through the end of the week. Now I want to talk about raw materials, Freeport-McMoRan, PPG, chemicals, what I saw there, which actually had a really good quarter. And then I want to talk through Nucor. And then after that, I want to just talk about what I saw from American Express. As you know, we were bullish American Express. We mentioned this a few days back. And that worked out because consumer credit is just really strong. So I wouldn't necessarily hold the exposure through next week unless you're a long-term bull American Express. Then I would just maybe buy puts against any long-term position you've got. And we can talk about that if you'd like. But let's actually see what we saw. Freeport-McMoRan, okay, it looks terrible if you just look at the accounting numbers until you realize that actually last year was a crazy bullish year. And all that's really going to happen is that people are not going to produce more copper. So this is what he wanted to really highlight. He was like, look, is the copper price down from January of 2025? Yeah, it is. I can't deny that. But is it the case that there's less copper? Like, how are copper inventories doing? They're up a bit. Well, actually, from because so now we're March, April, May, right? So they're actually down from March if you were to start looking quarter over quarter. And no one is really doing CapEx projects right now because of the nature of what's going on globally. But even more so than that, he ended up getting good pricing and seeing like massive demand because the net effect of the embargoes or the sanctions, sorry, let me say it that way, with the sanctions on Russia is that they are getting very different pricing than necessarily market pricing. They're seeing demand, they're seeing no change in demand. And he went on and on a bit about how weird it is. And as much as everyone wants to say otherwise, the only thing that's really going to happen is that there'll be less copper produced in this next year. And as soon as you get any end to the war, any stimulus anywhere on the earth at all, it's going to be like really bullish in their sectors. And then remember, we have an energy shortage and it actually does take a lot of energy to mine stuff. So structurally, you can't produce copper is what he's saying down here anymore. Like it won't be profitable for you to even mine it, So that's the situation in copper. As a result, Freeport-McMoRan is slowly but surely like inching its way back up over 30. What I would do, because the FOMC is next week and you've got going on in this marketplace, I would pick a price and just leg into it slowly over a period of time. The thing does have right now about a 2.5% dividend yield, plus or minus, depending on where it's swinging. And you could probably end up getting this long-term in the portfolio as just a buy and hold. Because look, what we're doing right now on the earth is really not sustainable. So in that regard, I definitely give the sustainable folks a lot of love and credit. And we talk about it on the natural resources side, on the energy side, but what we're doing in the raw materials side isn't that much different, friends. Like there's only so much of this stuff. And then afterwards, and he mentioned this, the number of properties where you could easily get copper out at a price that would actually make sense, that's declining as well. So just realize that. PPG, strangely enough, I was short this thing, so I was wrong. I'll go ahead and admit it. You can like look at my backdated. I was totally wrong on this. Will I then be wrong on Sherwin-Williams? I'm not sure. What actually helped them a lot was because they do have a certain type of raw material sourcing. They were able to really be okay on packaging. But these are it's still not all's clear. There were actually some weaknesses due to margin, but overall they've pushed through pricing aggressively, but their end markets are not necessarily so much the consumer. They are going to enter the consumer space though, as another player. So it'll be interesting to see how that plays out. Sherwin-Williams is mostly consumer though, so it's a different sort of animal. Additionally, they also benefit, for example, things they paint are things like trucks. They paint like the line on the middle of the road. They paint, any paint that they're using is really for a commercial purpose. So they actually did okay. And they talked about the fact that that's just a testament to how strong the US labor market is and what's going on there. Okay. Additionally, the steel industry, Nucor actually had great numbers, outstanding. I wish I would have been long, except the market did nothing on this one. Now, I think FOMC, we're going to have to figure that out. Obviously, people are worried about the economy doing its thing. But what's really fascinating here is how strong it was. And they said it was strong because essentially a couple things are happening. Number one, every country apparently is really worried about having enough steel supply given the events that have happened this year. So that is driving up demand, just the desire to stockpile some. The second thing is that because they have more US exposure, the US doing good, and it has to do with the semiconductor shortage starting to dissipate. One of the bigger users of steel is really that autos industry. And so now they're able to actually produce cars. Now, lest some of you freak out, and I told you this yesterday, you saw when we were looking at Union Pacific and CSX, the automotive numbers finally up for the first time. They actually shipped cars, which I've been waiting for them to do for a long time, up 11 and up 24. Both of these routes go straight to Michigan. So that's really, that's not cars coming off the West Coast so much, although it could be for UMP. Anyway, point is that cars use steel, semiconductor shortage is getting a little bit of improvement. As a result, this actually could be another leg of benefit to them, whereas other parts of steel are maybe doing a little less. That's actually what's happening there, which I think is just nuts. And then the last thing that I'll just show you on the macro side is really American Express. If you look at what's happening with American Express here, What they're saying that people just don't get about American Express, and this is part of the reason why I got so bullish is because when I saw the bank earnings reports, the lack of credit loss, and the fact that you saw more spending, I was like, wait a second now. The one company that has probably the highest level of credit score on it is American Express. And also, if you're telling me, banks, that the businesses are doing just fine, and the businesses are telling me they're just doing fine, then what's American Express going to do? Probably tell me they're doing just fine. And since they got clobbered so much, because of it just got clobbered like all the financials did. Nonetheless, this is what we're seeing right here, which is just an upward trajectory of volume, transaction volume on the network. And then when we look at the breakout here, this is the other thing that comes out that's really interesting. Restaurants is up, other is up, total T&E. These are travel expenses from businesses, right? And then lodging and airline has recovered a lot since the first quarter, but it's still not, the 0% is, this line right here is the 2019 line. So we still have a ways to go on airline expense for businesses, but nonetheless, other things have recovered, and that's really fantastic. Airlines and lodging right there, you can kind of see it. And then who is spending? It's the commercial small businesses, commercial build businesses. You can kind of see where it's going there. The biggest companies are absolutely getting in there and doing business. That's what this thing says. But even the consumers are doing really, really great. The US consumer is doing substantially better than US consumer is recovering really, really well if we look year over year, right? But like international consumer is doing great too. 130 up 135. And in fairness, the international consumer was lagging for a little bit of time relative to the US consumer, but they picked up in a ginormous way. So just realize that that's happened on the spending side. It's also the case that international small and medium-sized businesses have also really started to pick it up. So international credit card usage is up a lot. And I couldn't make sense of that because the international economic condition is disastrous, for lack of a better way to describe it. But that's interesting. I'm going to actually try to dig deeper and find out what's going on there, because that was really unexpected on the call. In general, they do say that they're moving towards a more millennial mix going forward. The millennials are just more comfortable with the use of credit cards and what it means to use between points and this and that and the services they're offered. So they're able to optimize their usage of American Express a bit more. And that's all I've got for today. Let me stop sharing and take questions. Hey, Dave, what's up? Dave, you're on mute.
Oh, yeah. Can you hear me?
I can hear you now.
The report by Snap of ads being way down.
Yeah.
Is that a pretty good indicator of what businesses are doing?
Well, remember, Snap is one very specific business as well. You know what I mean? It's really kids and stuff like that. There might just be a lot more use of advertising. And what I would really say there is it's Omnicom. I always say it wrong. It's probably indicative of that. I need to actually spend a little bit more time with Snap's earnings reports. It's not in the S&P 500, so it's not one that I look at all the time. But Omnicom had already shown this kind of weakness the other day. Advertising media down 9.1%. Precision marketing, which should in theory include something like Snap, but maybe does not, you know what I mean? So I don't know that I can say, oh, everything Snap, la, la, la. But I will say that it's possible that the manner in which and the way in which precision marketing now is doing its deal, maybe moving away from something like Snap and moving forward to other things. It also could be the mix as well of what's being advertised. Snap is a fairly young audience. It is not remotely people you're my age as far as that goes.
I know, but that's a big audience to market to.
It is, but they're using all kinds of things these days, right? So there's you can market to them through video games, you can market through them through any number of things that I think might be just as precision marketing and maybe more directed towards immediately purchasing.
Yeah, I think it looks like the ad business is declining substantially, and that's a pretty good, say, barometer of the business climate.
Well, generally, ad business is weak across the globe, right? But yes, that's true. Omnicom's numbers weren't great, wasn't terrible, but it wasn't great. But
Snap missed by a lot.
Let me see what their actual numbers were. I don't cover Snap, so I don't really know.
Oh, okay.
Yeah, but not what the street thought. You can never go by what the street
down like 40% today.
Yeah, I mean, you can never go by what the street thinks, because the street numbers, the way they do their numbers, or the way that the way that it's actually coming to pass these days is not my favorite thing within finance, which is basically, so revenue increased 13% year over year, but then they lost a bunch of money. That's what ticked people off. That's what it looks like here. So they technically probably had more, yeah. It looks to me like their revenue, like the desire to spend is one thing, that what it takes to actually do it is another thing. That's what it looks like to me.
Okay, Apple and Amazon report on Thursday.
Yeah.
I think Google reports next week too.
Yeah, everybody reports except for, I think everybody reports next week except for there's one holdout. I can't remember who it is off the top of my head. But yeah, Amazon, Google, Meta. I think Meta reports the following week. Let me double check that. But yeah, all the big cap tech reports, but you got the FOMC meeting. So if any of them cough it up, it's gonna double down what's going on with the indices. That's why I'm like, cash or hedge, those are the two things I would recommend.
Yeah, I totally agree with that.
Yeah. I mean, I don't have any strong views on them. They've gotten beaten up so much that, even if
not oil. I think oil's already, no, this is an opportunity to buy oil.
Agreed. You have to buy oil, because right now, this nonsense that's going on in the marketplace, it's nonsense. Do you know what I mean? There's nothing wrong with oil. Today it's like flat. So it's just whether or not there's something kooky going on specific to the oil markets, or, because I've told you before, there's people that game this market in a way that makes no sense, but it's not going to have anything to do with the actual fundamentals. That's also true, by the way, of the entire food complex. So I've been buying corn, wheat, soy. Every time it dips down below to its lows, I'll just pick up a little bit more. And I think you have through the summer to nibble through, but every single crop.
Ukraine and Russia just signed an agreement to ship out of the Black Sea.
Yeah, it doesn't matter though. You got to actually produce this stuff out of the ground. You know what I mean? Like, you know that. Whatever they're shipping out of the Black Sea right now is stuff that was already harvested last year, or was harvested from Russia, not from Ukrainian soil, right? So this is like really, this is a misunderstanding of how farming works. I don't know another way to say it. Like, certain things, they haven't been harvested yet. No matter how hard you try, you couldn't have magically harvested it before Mother Nature's going to let it come out of the soil. So that's, what I'm saying? You know what I mean?
Yeah, but even more on oil. I mean, the whole industry, they stopped exploring. I mean, they stopped, looking for new oil. So because of the price. So it kind of exacerbates the problem.
Yeah, well, I wouldn't say more than oil, because if you look at how much the grains have gotten beaten up, right? Especially soybean. Soybean is basically going to need to replace the fact that no matter how much you think you're shipping out of the Black Sea, there's almost no way they planted sunflower. And sunflower oil is the thing you use because of its proximity. If you want to, if you have a really bad shortage of palm oil, you would use sunflower oil in places, and it would just kind of, the chain of seed oil would just work itself through. But I mean, there's no way that we were anywhere near last year's sunflower oil production coming out of the Ukraine, which is one of the biggest producers of sunflower oil for Asia. And you had a magical palm harvest, and you actually had enough farmers want to plant soybean to make up for all of the loss of those two seed oils. So the fact that soybean has sat there and chilled out at its lows, that's not sustainable. You know what I mean?
Well, there's not a sunflower oil contract. So you're saying soybean
oil.
would
Yeah,
take the place?
Yeah, because you basically was for some of the products. So sunflower oil is really functional. You can eat it, you can stick it in soap, you can put all kinds of different use cases for it, right?
Right.
Soybean oil would be the next oil you would use, you know, and so that would be the way to go. But in general, there's all the soybean oil, soybean crush, all that stuff. Just buy the damn soybeans. You know what I'm saying? You'll be fine. Which is what I have. I have the soybean index, SOYB.
Oh, SOYB. Okay, that's an NFT.
ETF. Yeah, it's just an ETF. Yeah.
Cool.
But I think soybeans should do just fine. And then, you know, Brazil will plant what it plants in September, and we'll find out what's going on. But by, you know, this is our grains start coming out of the ground around next week. And then the month of August is a big month. September, early September, we might still have some corn coming out of the ground, but we all know there wasn't any corn planted. You know what I'm saying? It's not like there's confusion. A lot of people did a little bit more spring wheat in basically desert areas, but like, you know, I didn't leave much room for soybeans is all I'm saying, but like, you know what I'm saying?
Yeah, cool. Okay. One more thing. Tesla, did they cash flow negative without the Bitcoin sale?
So I think they're cash flow negative. I've taken a closer look, but that wouldn't come out of free cash flow. That would come out of cash flow from investing, I believe. I have to double check how the accounting treatment is of it. So it might still be okay. But you know what? Okay, look, you know what? This Bitcoin and how it's accounted for is everyone's got a triple check on this. So let me I do have to do some work and figure out what part of the income statement or the cash flow statement will actually come out of. It's an interesting question. Let me take a look. In other words, good question.
Cool. Have a great weekend.
All right. Take care. Have a great weekend. Bye.